The question on every metal investor's mind right now is simple. Can silver climb all the way to 80 per ounce by January 2026? This is a bold target, especially when silver has historically traded far below this level. But with unprecedented market conditions in 2025 and strong fundamental catalysts, many analysts are debating whether a major breakthrough could be on the horizon. To answer this, we'll unpack where silver is today, what's driving recent price movements, what key forces are shaping the outlook through early 2026, and whether hitting $80 is a realistic scenario. Rather than jumping to conclusions, we'll look at actual forecasts, sentiment, and risk factors shaping the silver market. Let's first establish the current price landscape. As of late December 2025, global market data shows silver prices have surged dramatically. Trading economics data indicates silver reached around $68.76 per ounce, a record high and up more than 130% year over year. This rally has outpaced most traditional forecasts. This kind of momentum matters because reaching $80 means pushing well beyond even these recent highs. It's not just modest growth, but extension of a powerful rally. Why has silver moved so strongly in 2025? We can point to a blend of safe haven demand, industrial pressure, and investor positioning. Safe haven appeal. With ongoing global macro uncertainty, volatile inflation data, fluctuating interest rate expectations, and geopolitical tensions, investors have been moving into precious metals, including silver. Silver often benefits alongside gold when markets are uncertain. Recent news shows both gold and silver hit record highs due to such factors. Financial Times. Industrial demand surge. Silver isn't just a financial asset. It's a key industrial metal. Solar panels, electric vehicles, electronics, and green tech heavily use silver, and growth in these sectors has been one of the strongest demand drivers. Analysts are pointing to tightening physical supplies as demand remains elevated. FX Empire. ETF and investment inflows. Exchange-traded funds, ETFs, and other investment vehicles have been attracting inflows into silver, which adds buying pressure beyond physical consumption. Some forecasts suggest this could continue into 2026. FX Empire now. Let's look at various forecasts for silver prices through 2026, because this is where the critical context for the $80 question lies. A range of forecasting models shows wide but bullish targets. Some market sources place 2026 silver price targets in a broad range, from moderate increases to more ambitious levels. One forecast suggests silver could reach roughly $56 to $88 per ounce in 2026, driven by continued deficits between supply and demand. Advantage Gold. Other models suggest even more optimistic prices. Certain long-run projections point to silver hitting $90 to $100 by the end of 2026. These are typically based on structural deficit assumptions and extended industrial demand. Coin price forecast. Even some high-profile market commentators have stated that silver could hit 80 or higher by the end of 2026, pointing to persistent tight physical markets and heavy demand. These views aren't consensus, but they are being discussed in investment circles. Investing News Network, INN. At the same time, more traditional institutional forecasts offer a moderate outlook. For example, Bank of America analysts projected silver might reach around $65 per ounce by 2026, supported by ongoing demand and physical deficits. Finance magnates. If we weigh these forecasts together, several key insights emerge. First, consensus forecasts are bullish. Most models expect higher prices in 2026 compared to 2025. Nearly all predictive ranges are above 2025 price levels. This suggests that the metal is likely to continue rising rather than collapsing. Second, however, $80 is at the high end of forecasts. Many traditional institutions and data models place typical targets below $80, but not far below. Figures in the mid-60s to upper 70s still implies strong upside relative to recent prices. Third, the spread in forecasts highlights uncertainty. Silver is an inherently volatile commodity. Some technical analysts even warn that steep recent rallies could lead to corrections before further gains. A recent financial commentary noted that recent record deviations from moving averages might signal pullbacks at times. Barron's. Let's turn now to the main drivers that could push silver toward $80. 1. Interest rate environment and monetary policy. Global monetary policy plays a major role in precious metals pricing. Lower interest rates tend to reduce the opportunity cost of holding non-yielding assets like gold and silver. If major central banks, especially the U.S. Federal Reserve, cut rates in 2026, this would likely make silver more attractive relative to other assets. Expectations for potential rate cuts in 2026 have been a key reason why precious metals performed so strongly in late 2025. Markets have priced in the possibility of one or more cuts, which helps push investors toward metals. 2. Supply deficits. A structural supply deficit means that demand consistently outpaces available supply. Multiple reports show that silver has experienced ongoing deficits, particularly as industrial use expands faster than mining output. Forecasts assuming continued deficits naturally push price targets higher, because constrained supply has to be balanced by either higher prices or reduced consumption. FX Empire 3. Industrial technology demand. Silver's industrial demand isn't static. Sectors like photovoltaics, solar, 5G electronics, and EV components are growing rapidly. As these sectors expand, they consume larger quantities of silver. This is a fundamental demand driver that supports higher price fundamentals beyond speculative flows. FX Empire 4. Safe haven investment flows. Investors turn to silver and gold during times of market uncertainty, inflation concerns, and geopolitical stress. These flight-to-safety dynamics mean prices can break out beyond what traditional supply-demand models might suggest. Recent stories from financial media confirm this trend in precious metals. Financial Times Now, it's also critical to acknowledge the counter-arguments and risks. Not all forecasts agree on dramatic gains, and some institutions remain cautious. A few models suggest silver could lag behind gold, or experience intermediate corrections as markets digest recent rapid gains. One major bank's previous forecast even suggested silver might not keep pace with gold's bull run in certain scenarios. Reuters. Volatility is another risk. Strong rallies often lead to sharp pullbacks when sentiment cools, or if macroeconomic data surprises on the positive side. Silver has historically been a more volatile metal than gold, meaning price swings could disrupt bullish patterns. Finally, reaching exactly $80 by January 2026 is a very specific target. Even where long-term forecasts eventually exceed that level, timing matters. Predictions often refer to end-of-year or mid-year 2026, not specifically January. That means hitting $80 earlier in the year requires acceleration beyond typical forecast timing. So can silver hit $80 by January 2026? Based on current prices, recent momentum, and available forecasts, hitting $80 is possible, but not guaranteed. It sits toward the upper end of expectations. Many market models show silver reaching mid to upper 60s, some even above $70, and a few more aggressive scenarios place prices near or above $80 over a full-year time frame. But getting there by January may require stronger catalysts than we've seen so far, like accelerated monetary easing, unexpected supply shocks, or heightened industrial demand relative to expectations. That doesn't mean the target is unrealistic. It's within the range of bullish scenarios, but it does not appear to be the consensus baseline. If we move beyond forecasts and headlines, the most important question becomes how people should realistically think about silver as we move closer to January 2026. Price targets like $80 attract attention, but markets rarely move in straight lines. Understanding behavior, timing, and structure matters more than chasing numbers. Silver behaves differently from many assets because it sits between two worlds. On one side, it is treated like a monetary metal, reacting to inflation expectations, currency strength, and central bank decisions. On the other side, it is an industrial input, responding to real-world demand from energy, technology, and manufacturing. This dual nature is why silver often lags gold at first, and then accelerates sharply later. When investment demand and industrial demand rise at the same time, price moves can become unusually strong. Looking into early 2026, one realistic scenario is consolidation rather than non-stop acceleration. After a powerful run in 2025, markets often pause. This does not mean a trend has ended. It simply means prices need time to absorb gains. During such phases, silver can move sideways, pull back modestly, or trade within a wide range before deciding its next direction. If silver holds above previous breakout levels during this phase, that would still be considered technically healthy. Another factor that matters is positioning. When too many traders are already bullish, upside becomes harder in the short term. Data from futures markets often shows when sentiment becomes crowded. If optimism reaches extreme levels in late 2025, prices may struggle to move higher immediately in January 2026, even if long-term fundamentals remain strong. That's why some forecasts show higher prices later in 2026, rather than right at the start. Currency dynamics also play a major role. Silver is priced globally in US dollars. If the dollar weakens due to rate cuts or rising deficits, silver gains support. If the dollar strengthens unexpectedly, metals can face pressure even when demand remains solid. Many analysts expect a softer dollar trend into 2026, but currency markets can change quickly based on economic data, policy signals, or global events. Inflation expectations are another key piece. Even if inflation slows compared to previous years, what matters is whether it remains above comfort levels. Persistent inflation keeps interest rates from falling too fast and increases interest in assets that historically retain purchasing power. If inflation data surprises to the upside again, silver could benefit quickly as investors reassess long-term value preservation. Physical market signals are also worth watching. When physical silver premiums rise, inventories fall, or delivery times lengthen, it shows real demand stress rather than speculative movement. In recent years, physical supply has struggled to keep up with demand growth. If this trend continues into early 2026, it strengthens the case for higher prices even if paper markets hesitate. However, it's important to stay realistic. Reaching $80 is not required for silver to be considered successful or attractive. Even maintaining levels well above historical averages would still represent a strong long-term outcome. Markets do not owe anyone a specific number. What matters is direction, sustainability, and balance between demand and supply. For long-term thinkers, the focus is often on gradual accumulation rather than perfect timing. Silver has historically rewarded patience more than prediction. Trying to guess the exact month or price can lead to emotional decisions. Those who benefit most tend to focus on broader trends rather than short-term noise. Risk management also deserves attention. Silver's volatility is higher than gold's. Price swings of several dollars in a short period are not unusual. Anyone engaging with silver needs to be comfortable with fluctuations and avoid overexposure. Balance matters more than conviction. Another point often overlooked is substitution risk. If silver prices rise too fast, industrial users may look for alternatives or reduce usage where possible. This doesn't eliminate demand, but it can slow growth temporarily. Sustainable price increases usually come from steady demand rather than sudden spikes. Looking at January 2026 specifically, the most realistic expectation based on current information is a wide range rather than a fixed target. Silver could be in the low 60s, the high 60s, the 70s, or even briefly touch higher levels if conditions align. A sustained move above $80 would likely require confirmation through multiple signals: supportive monetary policy, stable or falling real yields, strong industrial demand data, and continued supply tightness. What's important is that the overall structure for silver remains constructive. The long-term story has not weakened. Energy transition needs, technological growth, and monetary uncertainty all support silver's relevance going forward. Whether the market chooses January 2026 or later to express that fully is something only time can reveal. From an educational standpoint, silver should be viewed as part of a broader financial picture, not a standalone solution. Diversification, discipline, and understanding risk are more important than any single forecast. Price targets make good thumbnails, but preparation is what protects decisions. So when asking whether silver will reach $80 in January 2026, the honest answer is this: it is possible under favorable conditions, but it is not a certainty, and it is not required for silver's long-term case to remain strong. Markets reward those who respect uncertainty more than those who demand certainty. The smarter approach is to watch trends, understand drivers, stay patient, and avoid emotional reactions. Silver has always moved in cycles. Those cycles don't follow calendars, they follow conditions. And as we move into 2026, silver remains one of the most closely watched metals in the global market. Not because of a single number, but because of what it represents at the intersection of finance, industry, and long-term value.